Hi friends, in this video we are going to cover the topic of discipline and patience. So many traders or many beginners who come to market, they find it extremely difficult to be disciplined in the market, take decisions, take trading decisions in a proper, disciplined, process oriented way, and also they they see themselves as being impatient, wherein they get into trades at wrong location. They do not follow their own system. They think that they are going to miss a trade or they are in the wrong trade, and they will not have this patience to uh, you know be in that trade, or to take or wait for the price to come to a proper location to take a trade. So this, though I mean this is a psychological aspect to trading, these qualities will definitely affect your end of the month PNL. So if you build these two qualities in yourself when you trade, this will have a huge impact on your PLNL, and it will 100% be positive. So many trades where you end up losing money, or where you get out early before your stop loss is hit, such trades will either reduce or completely you will be able to remove them from your daily trading journey, and it will have a very positive impact on your PNL. So what happens generally is, when the market begins and the first bar starts printing on your screen, you or your mind basically starts craving for the action to be in a trade. So you can call it as an adrenaline rush, but basically you want to be a part of that action, and you think that if you're not part of that action, you may lose a good opportunity to make money. And that's why all the time, or whenever a particular bar is getting printed on the screen, on every bar you are looking, or you're trying to see if you can enter a trade on that bar or that candlestick. So, and because you are always at every candlestick, you are trying to enter, uh, or you are trying to analyze if you can enter a trade. All the time you are spending a lot of mental energy, because all the time you are thinking that, oh, can I take a trade over here? Will it be a loss? Will it be a profit? So there is a lot of emotional baggage that gets created when you start uh, trading this way. So the problem, or why you do this, is you don't basically have a trade plan. So what is a trade plan and why it is so important? So a trade plan basically means that you, before the trading or the market starts, you already know on which locations, if the price comes, you are going to search for a tradable low risk entry. So you are not bothered with a bar which is getting printed on the screen if it is not on your in your trade location. So what is a trade location? So if I quickly go to a chart, and if you see over here, let's say I use pivots, right, during my trading. But many people or many traders, for them there are certain levels which are very important. So you need to understand that current day that is going to unfold is the continuation of the action that happened on the previous day. So you need to kind of mark certain points on the chart, and you need to see what were the important levels for the previous day. So some traders mark the previous day high, the previous day low, the previous day close. So these are certain levels or certain levels in the previous day from where a huge move originated. So this is a level from where a big move originated. So they mark it as an important level because this is where the selling started. So when before the market starts, you have to plot these levels, and you have to wait for the price to come to these levels, because these are the location where generally most of the traders will make their trading decision. So you have to wait till the price comes over there. So for myself, I use pivots. So the pivots, you can calculate it the previous day and you can mark it as uh, lines, but I don't do that. So generally, and I don't enter in the top 3 or 4 candles in the market. So by that time, the pivots and the supports start getting rendered on the screen, and I then just wait for the price to come to that level to take a trade. So if you see these bars are nowhere near my trading location. So I am not at all interested in the market price action over here, or I am not even looking into entering a trade or seeing if it is a good position or not. All this stuff, I'm not even interested in this. So if you see now this came up, so this is where we will try to see if there is a low risk entry, right? So, but you need to also analyze what was the price action which happened before it came up to that location. So if you see at this location, the previous price action was bullish. So you definitely don't want to take a short trade here right away, because the previous price action has taken the day high out. It is coming up quite nicely. So you don't want to take a short position over here. So then the only thing that can happen is either it will face some resistance and break down from here, or it will break it, take some support over here and go ahead. So here in this location, you should be interested in the uh, finding a low risk position. So now if you see here, a huge amount of selling came, which came from the CPR. But now that this has extended so much from the CPR, we will not take a trade over here because it's already extended a lot from the location. So then in such situation, we will try to enter on a pullback, because the move originated from the CPR, and if it comes close to the CPR, we will think of entering over here. So this red bar was a good location to enter the trade. And if you see now, if I had not taken this trade, let's say we have not taken this trade and the price has moved down like this. So even if the market is falling, I don't care, or we should not be perturbed by this, that we missed the trade, or we should have taken this trade, or is this a good location to trade? Is this a good location to trade? Is this candle a good location to trade? We are not concerned about that. So you switch off your mental analysis during these times, which saves you a lot of emotional capital, and you're not exhausting yourself with lot of analysis during these bars. Now that the price has come over here, you can then again start seeing that do you get a low risk entry in this location. So this is how you have to approach the market. Basically, your trade plan should be prepared or ready either before the market starts or within the 15 minutes of the market. And once these locations are ready and your price is not in that range or near that location, you don't need to analyze or try to figure out if a trade was possible. For example, the previous day, if you see this price is hovering only within two resistances, it is nowhere close to it. And so there is no sense even trying to analyze this market, that is there any good position that is getting created where I can enter, because our trade plan is to take trades near these locations. So now if you see this, there was a huge red candle over here which is closer to uh, the resistance, and then a shallow pullback and again a huge selling over here, then again a shallow pullback and a huge selling over here. So now what happens is the mind, it mentally, we think that it's already fallen so much, it won't fall any further. We should look for a reverse trade, that is we should go for, it will move up from here and we should buy into the market. So many traders buy at this location because they think that it is already fallen a lot and it will go up further. But if you see these pullbacks, they were not even covering 50% of the previous down move. So this is the down move, not covering 50%. This is the down move, maybe got up to 50%, but then again selling came. So when you see such kind of action, we can get into these locations, trade at these locations, expecting that it will break down. It may happen that it does not break down, takes support over here and shoots up. But in that case, you can get out on a scratch trade or maybe a very small stop loss. But the risk over here is very low. And you may say that the risk is low over here also, you can enter over here. Definitely the risk is low. And if you want, you can get into these trades. But here the probability is reduced a bit because the trend is downwards and you are seeing big red bars and smaller green bars, and the pullbacks are also not big. So ideally, the previous price action is not supporting a bullish kind of trade over here. So always make sure that if you are facing a problem with discipline and patience, try to create a trade plan and try to stick to it. But as I said, it is easy to understand but difficult to implement during real time market. And that, as I have covered in other videos too, that happens because most of our brain faculties which help us in rational thinking are suspended or are not functioning at their uh, peak levels because the mind perceives the market as a threat situation. So it is it is not functioning, it is functioning basically in safe mode, and you need to keep things simple so that you can take good decisions with less performance uh, power of the mind. So these the trade plan will help you to resolve these issues, and this is not something that can be resolved overnight. So you watch this video and from tomorrow uh, every all these issues are resolved. That is not going to happen. You will have to practice this over a period of few weeks, and as soon as your mind or you yourself start realizing that having these qualities is making or is benefiting you in a good way, slowly and steadily it will it will become like a part of you, and there will be a time where you don't need to think about this. This will all happen in auto mode, just like when you are learning to drive a car. It is difficult to control the steering and the gearbox at the same time. But once after a few years, you don't even realize that you made a change the gear. It's all happening in auto mode in background. So similarly, this will also happen, but you need to give it some time and practice. Thanks.